Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And Scarlett Fu, we finally have the private credit ETF. It launched.
It launched, but what's going to happen now? A lot of questions.
Yeah, the SEC not happy about it. Let's get to the biggest stories right now in the more than $15 trillion global ETF industry. And as we mentioned, that much anticipated private credit ETF from State Street and Apollo already off to a rocky start, with the SEC voicing its concerns, leading the fund to announce that already it's going to change its name.
And we'll dig deeper into the story and what it means for the future of the fund with Cinthia Murphy of TMX VettaFi, because we're going to continue this conversation now with Cinthia Murphy, investment strategist at TMX VettaFi. Cinthia, you heard Emily give us kind of the lay of the land here. What's your take on what happened here? Did State Street fumble, or was this kind of a strategic decision to go ahead and ask for forgiveness later, as Eric mentioned?
Yeah, what's interesting about this is that, to Eric's point, there's not really a lot of precedence here. I don't think it was either, actually. I think it was what's the SEC usually do in the process of launching an ETF. They don't green light it as much as they just don't stop it. Once you get that filing recognized and acknowledged by the SEC, the clock starts. And unless the clock gets stopped, an ETF goes effective. So I think that's what happens here. What we've never seen before is this after the fact commentary. We've seen before where the SEC will get a 1984 filing and then pull it back. I think that happened with Forex leverage ETFs. We saw how they interacted with Bitcoin filings for 10 years back and forth. This wasn't that. So, I'm wondering if it's more just another sign of a government in transition, that this, fall somewhere through the cracks at the SEC level. But I don't think it was on State Street side. I mean, I think of State Street as the OG of our industry, and they've been in the business of breaking new ground and disrupting access. And I think this is another example of that. And sometimes disruption is a little clunky, but I think this is exciting. And I would guess just somebody forgot to do something there at the regulatory level.
Yeah. And I mean, to your point, there was a shift change going on, the handoff between the Biden administration and the Trump administration and, the leadership of the SEC. But I want to focus a little bit more on the after the fact commentary, because we have seen the SEC come out and complain about certain products. We know that they weren't thrilled about the launch of leveraged single stock ETFs. We know that they had some issues with VIX ETFs. What was different, I think, about this is that they really focused in on this single product, and it was pretty harsh commentary overall. And where do you think this goes, Cinthia? I mean, if you think about how this goes over the next couple of weeks, how do you think the dust settles?
I think Friday's final comment, which is no further comment at this point, is an indication that this goes to resolution. I cannot imagine a scenario where an ETF gets pulled off the shelf. We've never seen that happen, and I can't imagine that would happen here. So I think it will make for some interesting, storytelling. We'll follow it up and hear, a wrinkle in the story of ETFs. But I think it gets resolved and the product goes on trading, and it becomes a new category that we're going to see grow, like most first-of-a-kind funds.
Yeah, and Cinthia, to that extent, I agree with you. I think it's too late. It's going to trade on. The question is the precedent it sets. And Brian Moriarty at Morningstar wrote a great note on this about the seismic shift. It's not that it's private so much. It's that this ETF was able to go beyond the 15% limit of illiquid instruments held in a fund for mutual funds or ETFs. They have 21% in private credit in this fund. So doesn't that open the door to almost anything? Could we see art or other private equity offerings in ETFs now that this precedent has been set?
I think it opens the door, and I think the filing says they can go up to 35%, if I remember correctly, in private credit, which is huge. Now, if you think about how hard it was to even come up with this product, and they only have Apollo working with them on this, guaranteeing at least 3 bids a day for 15 minutes each. I mean, the illiquidity becomes a huge concern. I mean, how many Apollos are out there? How many of these funds and these setups are going to be put together so that we can can have a lot of different private assets and ETFs. It's going to be interesting to see. I can't imagine that there's a lot of them. So I don't imagine that we're going to have 20 of these funds out there. I think this would be a small category, but would be a powerful category. I mean, just at VettaFi, we recently did a survey with advisors and asking, hey, are you even interested in this? And almost 65% of them say, yes, we're interested. Our clients want access to this stuff. So I think it could be interesting, but is it going to be a massive list of ETFs? I'd be surprised if it is.
Yeah, and you bring up a good point. The public wants it this way. They want privates in the ETF wrapper. They want everything in the ETF wrapper. This is the way they want it, sort of like digital in music now, right? And I think this is where people they have been frowning on this ETF, but I think the investors, let's say some of the stuff is illiquid and doesn't trade, and there's a % premium discount. The arbitrage band gets stretched a little and it turns into a hybrid closed-end fund. I actually think investors are fine with that. They've proven in other cases that they're okay when ETFs turn into closed-end funds briefly. Do you see that here, where investors are just used to this kind of this sort of expanded holdings in ETFs that aren't exactly, liquid?
Yeah, it's a little bit of a compromise. I think this is where being State Street will matter. Like, do you trust this manager to do right by you? And I think State Street has incredible credibility in this space. They're a phenomenal shop, as we know, to go back to the OGs. So I think investors will be okay with it. I mean, unless we see some crazy action and, redemptions close and the actual ETF structure breaks down, then the conversation will clearly change. But I can't imagine this is where this is going.
Cinthia, before we let you go, we got to ask you, State Street, you mentioned one of the OGs of the industry. It's really been pursuing these partnerships, and it plans to launch a fund with Bridgewater. What happens to that fund given the reception to PRIV?
I think it's going to be exciting, actually. I think, we've been in this business a long time, and it's been kind of interesting to see the new avenues we're opening to ETF product development. And I think bringing all these big names through these partnerships with the ETF business, I think advisors are into it. I think clients are looking for it. I think it'll be a new era of really interesting products coming to market.
But do you think the SEC will get in the way? Do you think it'll?
I do think, yeah, exactly. So I do think, given that what happened to PRIV, whether this was an overlooking or a mistake or somebody didn't press a button somewhere at the SEC, I think they'll be watching more closely now on what comes next. But, the product is live, so I think others will follow.
Yeah, and that Bridgewater fund with State Street is supposed to go effective later this week, according to a filing last week, so we'll keep a close eye on that. Cinthia, great to speak with you. Really great on the news of the week. That is Cinthia Murphy of TMX VettaFi.